Hey there. Okay, so the question is, what makes a good investment? And listen, there's really two options when it comes to investing, in my opinion. There's capital gains, which is really big chunks of cash. So think fixing and flipping, right? I buy something for 50,000, I put $30,000 into it, I sell it for $100,000. I've made, not factoring in commissions and interest and that kind of stuff, I've now made $20,000, right? Okay, that's capital gains. Then there's cash flow. All right, so cash flow would be an example would be buying rental real estate. And let's say you weren't paying cash for it. Let's say you got a mortgage and your mortgage is $500 a month, but your rent is $900 a month. Again, not factoring in maintenance costs and not factoring in property management costs. You actually have a $400 a month positive cash flow. So that's cash flow, right? So which is the better choice? Which one's the best way to go? Well, the answer is it depends. All right. So in my career, I have found that both are very, very highly effective strategies. In fact, I think that you need to do both, right? In fact, when I teach my classes, when I'm working with students, and I'm talking out of my own personal experience, I find that both are very necessary. See, if we can take those big chunks of cash that we make for capital gains and then we reinvest those into certain cash flowing investments, whether that's rental real estate, apartment complexes, small duplexes, triplexes, fourplexes, or even into mortgage notes. Yes, you can buy notes and be the bank. Even when you do that, then you have the best of both worlds, right? So we can get the chunks of cash that we want we can then reinvest into cash flowing assets. And see, ultimately, I think we all need the cash flow if we're ever going to really get ahead. Because see, once you have enough cash coming in to cover your actual regular monthly living expenses, and that cash flow that's coming in passively, again, whether it's from rental real estate or mortgage notes, or even dividends, let's say, from the stock market, any of those type of things, if you have that coming in on a regular basis and that's exceeding your own personal expenses, you've actually won the rat race, right? So the problem I see with people just doing capital gains and just really seeking out capital gains type behavior like wholesaling or fixing and flipping, or even just selling widgets on eBay or whatever that is. The problem I see with just doing that, the challenge with that is it's a hamster wheel type activity, right? You can make really big chunks of cash and you can really have big paydays, but as soon as you stop, the money stops, right? And so it's a very active business, which I like to call a young man's game, and there's nothing wrong with it at all. We can make tons and tons of money doing that, but the problem is it's a hamster wheel activity. And so I'd like to see you adding passive activities to your investment portfolio as time goes on. So I hope this was helpful today. Have a happy Friday. Go get it.